Hey guys, I hope you are doing well. Welcome to our channel Digital Learning, where we post about latest happenings in crypto space and regarding different educational content which benefits you the most. So if you're new to the channel, make sure to subscribe to Digital Learning so you never miss any informative content. If we look on the chart of Bitcoin, we can see that Bitcoin price is under selling pressure at the moment, and to avoid the crash, Bitcoin must hold above $110,000. Now, let's move to the factors affecting Bitcoin and the crypto market. The market is nervous before Powell's speech. Bitcoin just slipped below $113,000, hitting a two-week low right as all eyes turned to Federal Reserve Chair Jerome Powell's speech at Jackson Hole. Here's what's happening and why it's impacting crypto markets. Bitcoin dropped to around $112,565, the lowest since August 3rd, as investors brace for Powell's upcoming speech at the annual Fed gathering. Markets are on edge, trying to interpret clues on future interest rate policy. Crypto, often seen as a risk-on asset, reacts strongly to macroeconomic cues like interest rate signals. Powell's words could reshape expectations for rate cuts, directly influencing whether Bitcoin and other digital assets rise or retreat. Today's dip signals uncertainty ahead of Powell's remarks, with markets pricing in an 84% chance of a September rate cut, down from nearly 98%. This pullback underscores how finely balanced sentiment is. A dovish tone during the speech could instantly spark a reversal, while a cautious stance might deepen losses. Let me know in the comments, are you bullish or bearish ahead of the speech? China considers yuan-backed stablecoins to challenge dollar dominance. China is reportedly considering the launch of yuan-backed stablecoins, a move that could reshape global finance and challenge U.S. dollar dominance. Here's why this matters and what it could mean for crypto and cross-border payments. According to Reuters, the State Council is reviewing a roadmap to promote global usage of the yuan, including issuing yuan-pegged stablecoins. This marks a major shift from China's prior ban on cryptocurrencies. Key cities like Hong Kong and Shanghai are being positioned as launch hubs. Currently, dollar-backed stablecoins dominate over 99% of the market. Meanwhile, the yuan's global payment usage has dropped to just around 2.9%, its lowest in years. This initiative aims to boost the yuan's role in international trade and payments. It's a notable policy reversal. China banned crypto trading in 2021, yet now appears open to yuan-pegged stablecoins. But hurdles remain. Capital controls and financial system stability are concerns. China is tackling this through careful regulation and starting with controlled environments like Hong Kong. Officials will discuss the plan at upcoming State Council sessions, and Shanghai Cooperation Organization (SCO) Summit may also address cross-border stablecoin usage. If rolled out, this could accelerate yuan use in global trade, especially among Belt and Road partners. What do you think? Will a yuan-backed stablecoin become a real competitor to the dollar? Drop your thoughts in the comments. Crypto groups push back against banks to defend the Genius Act. Big showdown in D.C. Crypto groups are pushing back hard against banks trying to rewrite the brand new Genius Act. Let's break down what's going on and why it's huge for stablecoins and the future of crypto. Two major crypto advocacy groups, the Crypto Council for Innovation and the Blockchain Association, sent a joint letter to the Senate Banking Committee. They're strongly opposing the American Bankers Association's push to tighten the Genius Act over what's being called a stablecoin yield loophole. The Genius Act blocks stablecoin issuers from giving yield, but it doesn't stop their partners or exchanges from doing it for them. Banks say this makes stablecoins unfair competition against bank accounts. But crypto groups argue that removing Section 16-D could lead to confusing rules in different states and limit user access. This isn't just a legal debate, it touches consumer choice, DeFi innovation, and whether users can access staking yields through stablecoins. Crypto advocates argue that stablecoins are not bank deposits, they don't fund loans, and overregulating them could hurt accessibility and innovation. So to put things in perspective, yield-bearing stablecoins have delivered over $800 million in payouts, with Ethana holders raking in the most. Meanwhile, the total stablecoin market stands around $288 billion, which is still small compared to the U.S. money supply. So, do you think banks are trying to slow down innovation, or should stablecoins face tighter restrictions? Let me know your thoughts in the comments. Trump demands Fed Governor Lisa Cook resign amid fraud allegation. The president has publicly demanded the resignation of Federal Reserve Governor Lisa Cook following serious allegations of mortgage fraud. Here is what is happening and what it means for monetary policy. Bill Pulte, who heads the Federal Housing Finance Agency, referred Cook to the Department of Justice, claiming she listed 2 properties, one in Michigan and one in Atlanta, as her primary residence on separate mortgage applications in 2021. Trump responded with a post demanding she must resign now and is even considering firing her for cause. Trump's push is seen as part of a broader strategy to reshape the Federal Reserve's board with rate-cutting allies. However, legal experts say firing a Fed governor is extremely difficult. The law allows removal only for cause, typically dereliction of duty or misconduct, and prior personal actions may not qualify. The Fed's unique structure reinforces its independence and limits executive power. This move comes after another Fed governor, Adriana Kugler, resigned early, opening a seat for Trump to fill if re-elected. It highlights growing friction between the White House and the Fed over interest rate cuts. Market watchers are increasingly concerned about the political pressure potentially undermining the Fed's independence. On August 19th, data from institutional crypto investment funds showed a massive outflow of $523.14 million, and on August 20th, $311.57 million exited the market. Outflows mean that investors, mostly big institutions and funds, are pulling their money out of crypto-related products like Bitcoin ETFs, Ethereum funds, or other crypto investment vehicles. This is significant because large outflows usually signal that institutional investors are either taking profits after recent rallies, or hedging against risk due to market uncertainty, or losing confidence in short-term crypto growth. When such big amounts move out in a single day, it often adds selling pressure to the market, and that can push prices lower. Historically, when we see outflows of this size, it tends to cause short-term price corrections. For example, Bitcoin recently dipped below key levels after heavy fund withdrawals. Ethereum and other altcoins also faced pressure because institutions influence overall sentiment. Now, while this outflow is negative in the short term, it doesn't necessarily mean the bull market is over. Sometimes outflows are just temporary repositioning, investors moving funds around to prepare for a better entry point. So the next few days will be crucial to see if this trend continues or if money flows back in. Scammer poses as UK police and steals a staggering $2.8 million in Bitcoin from a cold wallet. Here's how this heartbreaking hack went down and how to avoid it. North Wales police are investigating a case where a scammer pretended to be a senior UK detective, telling the victim their personal details were found on a suspect's phone. The scammer then urged the victim to secure their assets by visiting a phishing link and entering their seed phrase. Within minutes, the funds were drained from the hardware wallet. This isn't a beginner scam, it's deeply sophisticated social engineering targeting even seasoned investors. The phone call and urgency made it seem legitimate. North Wales police stress that law enforcement will never call you about your crypto or ask for your seed phrase. That single request, a massive red flag. Here's how to stay safe. Never share your seed phrase, no matter who calls. 2. Verify independently. If you receive a call from someone claiming to be police, hang up and contact official channels. 3. Always distrust requests made over the phone under pressure. That urgency is the scammer's weapon. Stay alert. No real authority will ever ask for that kind of detail. This is a serious warning that scammers are getting smarter. Stay cautious, stay safe, and protect yourself. Let me know in the comments if you've seen scams like this. Wall Street warns of a $6.6 trillion crypto crash risk. Big alarm on Wall Street today. Analysts are warning that stablecoin yield loopholes could potentially trigger a staggering $6.6 trillion in deposit outflows, putting crypto and the broader banking system at risk. According to a Forbes report, Wall Street banks, including JP Morgan, Bank Policy Institute, and the American Bankers Association, cautioned that the new Genius Act's stablecoin rules may inadvertently allow yield-bearing crypto products to lure away deposits from the traditional banking system. This could expose the financial system to massive instability if not addressed. The $6.6 trillion comes from a U.S. Treasury report estimating that if stablecoin platforms allow yield through affiliated services, banks could face withdrawals on a staggering scale. That's roughly what the stablecoin market is expected to grow into, up from about $280 billion today to around $2 trillion by 2028. This isn't just about crypto, it's about systemic risk. If too much money flows into crypto instead of into bank deposits, it could elevate interest rates, reduce lending capacity, and disrupt financial stability. That's why banking groups are pushing Congress to close this yield loophole before more damage is done. What do you think? Could yield-bearing stablecoins really shake up our financial system, or is this just regulatory overreaction?
And that's it for today's crypto news. The market never sleeps, and neither do the opportunities. Whether it's Bitcoin, Ethereum, or the next big altcoin, knowledge is your greatest edge. If you enjoyed this update, make sure to hit that like button and subscribe to Digital Learning so you never miss the latest trends, news, and tutorials. Turn on the notification bell so you're always the first to know what's happening in the crypto space. Thanks for watching, and I'll catch you on the next one.